Today's edition of Back Roads of Illinois. We are bringing you lasted for farming sources and information sponsored by AgriGold. We're glad you're here. I'm Cesar Delgado. I am your host of today's program. We have a conversation with Karl from conus. We will have a conversation about these grains markets for right now with the tariffs for China. Then I am joining with Steve Georgey from Allendale Inc. on today. Tomorrow we have Greg McBride from Allendale Inc. for tomorrow's podcast for the Markets Club podcast. Otherwise, this is your rural news sponsored by AgriGold in central Illinois. John Deere has reported that 119 layoffs in Ankeny, Iowa plants. John Deere has a lot of labor been layoffs for this year. In the Department of Agriculture Research Lab in Peoria, Illinois, there was cut from the administration. However, they are coming back to work in the research lab in Peoria because of it. The bird flu from backyard flock and wild birds are in central Illinois. Next week will be a commodity classic for Denver, Colorado. Otherwise, we have coverage for the Commodities Classic from other farm broadcasters in the Midwest on back roads of Illinois. Finally, this will be the farm doc for next Tuesday, March 4th at the Beef House in Covington, Indiana at 8:30 in the morning. The tickets are available for $40 each person in the Beef House. This has been your rural news sponsored by AgriGold for this afternoon. This is your commodities markets for today from Kyle Bumstead from Allendale Incorporated. Corn and beans is under pressure on today. March corn is down at 3 to 5 cents. May corn is down at 3 to 6 cents. Soybean futures is under pressure on today. May beans are down at 5 to 10 cents. July beans are down at 5 to 10 cents. Chicago wheat is down. May wheat is down at 9 to 5 cents. July wheat is down at 3 to 6 cents. Let's take a look for the livestock markets. Cattle is up for today. April cattle is up at 3 to 6 cents. June cattle is up at 5 to 10 cents. Feeder cattle is up at 5 to 10 cents. May feeder cattle is up at 4 to 5 cents. July feeder cattle is up at 5 to 10 cents. Lean hogs markets are up for today. April hogs is up at 5 to 4 cents. June hogs is up at 5 to 10 cents. This has been your commodities markets update for this afternoon. We have a conversation with Karl from conus. Hey, Karl. How are you today? Let's discuss about the grains markets for right now. Could you tell us what is your thoughts on it?
I am doing well. Thank you for having me back, Caesar. The big thing in the market, I think, right now that I'm watching is obviously the South American harvest. We're looking at improved conditions in Brazil for the soybean harvest and for the safrinha planting. Also seeing some better conditions in Argentina. And bottom line is the crops, at least in Argentina, are about as bad as they're going to get. In Brazil, we're still seeing some downward pressure on the market there. Yields just are not as good as what they thought they would be moving forward in Brazil. They started out very good, and it looks like they're backing off on the soybeans now. And of course, we have concerns over getting the safrinha crop planted. A lot of positioning in the market this week, though. We have the Ag Outlook Forum taking place in Washington, D.C. later this week. We'll get the initial production numbers from those guys on Thursday. And on Friday is first notice day against the March contracts. So a lot of positioning to start this week out with the market. And really, we're not seeing tremendous downward pressure on the market. We just don't have enough fresh bullish news to warrant fresh buying that would give us higher futures.
How is the fundamental on the corn markets? Corn futures is down from today again.
Yeah, we continue to see pressure on corn, and the thing is, the fundamental outlook really hasn't changed that much on corn. U.S. production last year still 230 to 250 million bushels short of what we're seeing for demand this year. The thing is, with the market, there's some thoughts we could see a sizable increase in corn acres this coming year. So it could be just a temporarily 1 year draw on stocks, and that's prevented additional buying from taking place in the complex. But the fundamental outlook on corn remains that the global stocks to use remains the tightest it's been in the past decade. So the global stocks on corn are really supporting us on the downside. And that doesn't mean we don't see back and forth trade. I think our downside risk is limited from where we're at, though.
How about the technical side? Karl,
Yeah, the technicals is where we've seen our most pressure come from here this week. Just not a lot of buy indicators. The good news is there's not tremendous sell indicators. We're just not seeing enough interest under the market to buy it. It appears as though on corn, the May contract looks like we're becoming range bound between about that 475 and $5 mark. And that seems to be a pretty comfortable trade range. That's where we saw March corn spend most of its time. So it looks like that's where May is going to take over when it becomes the lead month.
of course. Could you explain to our audience on the March planting intention report?
Yeah, this year it's a pretty well thought fact that we're going to see an increase in corn acres. Last year, U.S. farmers planted 90.6 million corn acres. Expected to see that come up to about 94, maybe 95 million this year. Soybean acres last year we planted 87.1 million. Expect those to dip down between 84 and 85 million this year. Basing that off what we're seeing for seed corn sales, reports out of Iowa that seed dealers seeing a 7 to 10% increase over last year for corn seed. Also seeing some nitrogen demand back that up. So it looks like those are pretty suspect numbers that we could trade to and probably get. That's what trade is really looking at. But it'll come down to weather, and we do have a bit of weather between now and when we would start making more decisions on uncommitted acres. And really, those are the ones that we're really looking at, the uncommitted acres. Given last fall's pretty much open weather, we got a lot of fall applied fertilizer on. So to see the soy complex may need to push to get a few of those acres back out of that uncommitted side. We're not seeing too much of that this week, but I think as we get into March, we will start. If we see a big increase in the export market.
What is your thoughts on the cattle markets with these cattle markets? Do you recommend for the insurance coverage for this prices?
I do think on the livestock, you should be looking at any type of risk management right now. We're at some all-time high cattle values for both feeders and for the fat cattle. So I do think a guy should look at the LRP insurance possibly, especially if you just don't feel comfortable going to the futures to hedge, or you don't maybe have the volume, definitely look at that LRP insurance. It's a quite an affordable tool to put into your pocket to use, because this cattle market, like I said, we're sitting at some historically high values. A correction is not only expected, but it is more than likely to come at any time.
Hmm. Do you offer LRP for your clients with these prices?
We have an insurance agent we work with, and yeah, she takes care of our LRP clients, and she's been writing quite a few contracts here lately.
Great to hear that. Do you have any final thoughts on this afternoon's markets?
I think one thing we have to remember is that the seasonal trend is for pressure in commodity values into the first part of March. Once we see the calendar flip over, I expect to see a little bit more interest in U.S. weather. The U.S. drought is more intense than it was last year. Not saying it's going to be a huge factor, but I do think it will be a factor in some spring decisions. So keep an eye on the market. Don't get dejected because we're trading weaker here. I expect to see values rebound for us.
What do you recommend within the planting season with the grains prices?
I think we have to look at our break evens, get a game plan in place and look at, where your selling windows need to be realistic and get some offers in place with your typical buyer to get some coverage on in case the market does a lot of times you see big rallies in the overnight market and you can help take advantage of that.
Thanks, Karl. Do you like to watch the Lions?
Uh, I like to when they win, but not so much sometimes. But yes, we love the Lions here.
I'm sorry for this season. My Bears was bad.
Yeah, every year you got to have hope.
True. This is Karl from conus on Back Roads of Illinois. I'm joining with Steve Georgey from Allendale Inc. on today. How are things in northern Illinois nearby Chicago?
Things are warming up. It's been very cold the last few weeks, and now we're back near 50 degrees today. So very nice today, and we're going to have a nice week, a warm up week here, but back to the cold again. We've got snow in the forecast in that 2-week forecast again. So we'll enjoy the weather while we can.
I know I love it, but welcome to Illinois.
Isn't it great?
Of course. Steve, could you tell us what's impact on the beans yields for the planting intention on March? It is $1 million question.
You are not kidding. So talking about planting intentions here at the end of March, looking at yields, looking at everything else, we're probably going to see a little less acres for beans this coming year, and looking for more acres out of corn. But for soybeans, and it pans out to be a little bit better right now for corn than it does for beans. So we could see that switch where more people are going to start looking at planting corn and look for a pretty big corn number on that planting intentions report. But we are looking for a little bit less, 1 million to maybe 1.5 million acres less here for soybeans for the coming report here on March 31st.
What is that probably trading for China or something else?
Yeah, we talk about China right now. Some of these concerns that we have are going to be, what kind of tariffs do we put on? We've been talking about now March 1st, do we put tariffs on? Do we not put tariffs on? We were going to February 1st, and we ended up kicking the can. So now looking at tariffs, do we do them? Canada, Mexico, and an additional 10% out of China. If we do that, will that hurt the demand? Right now, we've got our pricing is better out of South America for beans than it is here for the U.S. That's why export sales have been struggling a little bit. Still okay overall, but struggling a little bit. And we may see that struggle continue if these tariffs do go on. But something to watch. Will China continue to buy from the U.S.? Right now, they've been buying kind of token purchases. Or if we put tariffs on, do we lose that relationship a little bit and we start
prices for the grains markets?
Yeah, the cattle markets, they are. We're finding a little bit of support out of cattle here lately. Last few days have been a little bit better, but we've seen the last several weeks, the cash market has been tough and it has been down and down and down. Do we see that again? I don't have any cash bids here yet, but looking at that as we go later into this week, can we see some more steady trade maybe? Box beef has been a little bit better as well. So maybe we can see cattle markets kind of pause in here a little bit. And really the question is, do we see more and further liquidation from these funds, that big managed money, that big pool? Do we get some liquidation from funds? What is that and how does that impact the cattle market? We've seen them go from a record long position for fat cattle, and they've taken that back a little bit. But do we see, and as we've talked about before here, tariffs, do those tariffs come on the market? What kind of impact will we have if tariffs do with Mexico? 5% of our feeders come out of Mexico. So when we look at that, can that have a little bit of an impact here for feeder cattle? It might. But once again, are we putting tariffs on or are we not? That impact could potentially be a little bit friendly if we see tariffs go back on again. That might invite the bulls back into this market and may give us a little bit more upside here if that does end up happening. But boy, we move around a lot. It seems like the cattle market's not happy unless we're moving a couple bucks a day. So continue to watch for that kind of rhetoric and what kind of impact we may have if these tariffs do or do not go on as we get through the month of February and into March.
I know that you do grains analysis, but do you have any concerns about this cattle prices into the grains like in corn and beans?
You know, for the grain markets, I don't know if cattle will have much of an impact there. It seems like the grain markets have enough to sit and worry about with the acreage that's coming up, and export sales that have been very good as far as corn. Not as good for beans, but comparing price, the grains versus the cattle, right now it's to be a cattle feeder out there. It's kind of tough, right? You've got cattle prices that have gone up, but not only that, we've seen grain prices rally over the last several months, and so it is tough. And so if something is going to help, if we could get a break in that corn market, that could help the cattle feeder as well, and maybe get some prices locked in for feed needs if we get a little bit deeper break here in the short term.
True. Do you have any concerns about this grains market, Steve?
I do right now. I am a little bit concerned. I'm concerned for new crop corn. I think for new crop corn, we made a rally up to around that 480 area. I do have a concern as we go into March. I think we're a little conservative on our number at 3.1 million acre increase. Some of what I'm hearing out there may be a little bit even bigger than that. Some guys I've heard as much as 4 to maybe 5 million acre increase. Our number is not quite that big, but if we do see a number like that come out on March 31st, that would make this new crop corn number look a little bit more bearish. And so you've had this easy street right now of grain market continuing to run. You have an opportunity for farmers to be making sales right now and sell some of that grain. A lot of guys have the John Deere payments that are coming up. They've got cash rents. You've got seed costs. You've got other issues, other payments that need to be made. And so do you borrow against your operating line in order to do it, or do you sell some cash? And I think a lot of guys here, as we get into the back half, these late half of February into the early part of March, we could see some cash sales being made. But that new crop corn contract, not only cash sales being made, but focus on what this acreage number could look like, that could pressure that December crop here as we go into that planting intentions at the end of March. So I am concerned about that. And I do feel that, we may end up seeing that kind of pressure on new crop corn. Now, new crop beans, maybe not as much. And that might be something where we may need to buy some acres there, and maybe it stays supportive. It's not that beans have to rally a lot. If corn breaks, beans just don't have to go anywhere. So, but it is favorable right now to be planting corn than it is for soybeans. So we need to be a little cautious with that moving forward. But it's more new crop corn that I'm concerned with than I am for new crop beans.
What are you watching for this Friday at the Ag Outlook Forum?
There'll be a couple things we need to watch. Not only, as I've been mentioning, right, what does USDA say about acreage? They're going to use a trend line yield. So they're going to come out with a 181 and some change for an average corn yield. But the things to watch for is, what are they going to say about biofuels? What kind of demand numbers are they going to have for ethanol? What kind of demand numbers are they going to have as far as feed usage, feed needs, right? If we've got less cattle, are we going to be feeding as much? So what does that balance sheet look like once they do put that out? And that's what I think we need to kind of watch, some of these underlying extra demand side of the story that they may give us. Because right now, acreage will be one thing, sure. The yield is pretty well set right now as far as what they use for budgetary purposes. but it's going to be everything else. And so that's what we're going to need to watch, not only for corn, but also for soybeans. What kind of demand are they going to plug in? What kind of expectations do they have for tariffs? And these are things that could be shown here as we go through this ag forum here out on Thursday and Friday.
Thanks, Steve. This is Steve Georgey from Allendale Inc. Thanks to Karl from conus and Steve Georgey from Allendale Incorporated, this has been Back Roads of Illinois. I'm Cesar Delgado. You have a good day.